Good morning. This is Japanese Economic Review Channel. Let's review yesterday's market performance from May 11, 2026. The Japanese market showed a striking divergence. The Nikkei 225 fell by 295.77 points to close at 62,417.88, while the TOPIX rose by 11 points to 3,840.00. This split highlights a concentrated sell-off in heavyweight tech stocks, even as the broader market demonstrated structural resilience. Meanwhile, the NY Dow edged up slightly, and the yen weakened further to the 157 level against the dollar. The primary driver yesterday was the blowout U.S. jobs report from last Friday. Non-farm payrolls surged by 115,000, crushing the expected 65,000 and reigniting growth optimism. This macro strength propelled the Nasdaq to a record-closing high. Tech giants like SanDisk and Micron saw significant gains, alongside Intel, which benefited from a new semiconductor supply agreement with Apple. This intense U.S. momentum set the stage for a highly charged Monday morning open in Tokyo. Yesterday's session was a tale of two halves. Driven by the U.S. tech rally, the Nikkei 225 reached a new all-time intraday high of 63,091 during the morning session. However, this peak triggered a wave of institutional and algorithmic profit-taking. Because the Nikkei is heavily weighted toward AI-adjacent stocks, the index faced an exaggerated decline once initial buying momentum was exhausted. Prices slumped in the afternoon, nearly closing at the day's low. We observed a classic defensive rotation yesterday. While 14 sectors fell, including high-beta tech, telecom, and heavy machinery, 19 sectors finished higher. Notable decliners included SoftBank Group and Mitsubishi Heavy. In contrast, capital sought shelter in stable yield generators such as food and financials, with Ajinomoto, JT, and Oryx seeing gains. This movement suggests that investors are not fleeing to cash, but are instead reallocating into value-oriented sectors. Despite the volatility in the prime market, the growth market 250 index rose for the fourth consecutive day. As AI stocks hit natural ceilings, speculative capital pivoted toward high-narrative frontier themes. In the space and drone sector, TerraDrone hit its daily limit, while Astroscale and Liberaware saw heavy interest. Additionally, next-gen energy firm PowerX reached a record high, proving that investor risk appetite remains highly active in thematic growth areas. A significant anomaly occurred yesterday regarding the yen. Typically, a weak yen, which pushed past 157 yesterday, acts as an automatic tailwind for Japan's heavy exporters. However, major automakers like Toyota and Honda, as well as transport stocks like JAL and ANA, actually lost ground. This signal confirms that the global tech and manufacturing sell-off narrative temporarily overpowered the traditional currency export correlation, marking a rare valuation disconnect. Looking at individual corporate moves, innovation remains robust across sectors. In retail, Meiji and Fujiya are launching new consumer products today, such as honey lemon soda gummies and Baskin-Robbins themed chocolates. In the B2B space, Biproji began providing a cloud banking system to Asahi Shinkin, and NSSOL signed a strategic pact with Matsumoto City for the management of Kamikochi. These strategic alliances reflect a continuing trend of digital transformation and regional infrastructure development. To conclude, yesterday's market landscape offers three key insights. First, macro resilience in the U.S. continues to underpin global confidence despite micro volatility in AI equities. Second, the prime-to-value rotation indicates a healthy rebalancing rather than a market exit. Finally, the sustained momentum in the growth market demonstrates that speculative appetite is unbroken. It has simply shifted focus to frontier themes like space technology and drones. Yesterday was a day of transition and tactical realignment. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.